Here we are wrapping up with contracts with a few other provisions to review. We discussed options a little bit earlier when we were talking about unilateral contracts. And again, that is where only one party is performing, the other party is just sitting there holding tight. Options for some of you might be thinking rent to own. And I think that this is probably the best category to put that in. Options happen typically. The example that I gave you actually in the previous video, though, was for layaway. If any of you have ever leased a car, which is basically like renting a vehicle, your lease was for 3 years, and then they gave you an option to purchase it and even put the price in the lease that you would pay at the end. Options in real estate sometimes happen while a developer will maybe write an offer and put consideration or earnest money down, and the seller just sits there. They can't sell it to anyone else, but then that maybe gives the buyer some time to do some due diligence or go and collect investors to get funding. I know another time I've heard of options working is with someone that's maybe buying a business, and they're buying the real estate, the brick and mortar, personal items such as tables and chairs and ovens and all of the things, right, in the restaurant, cups, plates, silverware, as well as staff. And they're maybe taking on any employee benefits that previous owner offered to their staff. They'll maybe buy it as an option for 3 months to job shadow and see maybe how not only what the books look like, but do the activities on a day-to-day basis reflect the profit and loss that maybe has already been presented. And that way someone gets maybe a little bit of a overlap in ownership to see if that's really an investment they want to move forward with. So the buyer's the one that's doing the activity. An option must have all the valid elements of a contract. But again, it's a unilateral contract. Land contracts, this is maybe a new concept for us that we haven't talked about yet. A land contract is owner financing. You might have also heard it called buying something on contract. This works well in a couple of scenarios. Number one, in the 80s, interest rates for a mortgage were at like 18%. Crazy number. So if you could find a seller or an owner who is willing to sell you their property on contract, they become basically the lender and they would only charge you 10. Well, then that was a way to save a lot of money in interest rate, right? Another type of land contract you might see is someone who maybe moves to the United States. They've got money for a down payment, but they don't have any employment history in order to qualify for a traditional mortgage. So maybe they would buy something on contract from a homeowner. And then in 2 years, when they do have credit and that employment history, they could go get a loan, finance the property, and then that seller / lender goes away. Time is of the essence. We talked about this one already. And again, it means that not everything must be done ASAP within the contract. It means that there are certain deadlines that must be met along the way. Contingencies. This is what I call a subject to. I'm writing this offer subject to the buyer obtaining a mortgage, or subject to the home inspection being done, subject to sale of their current property, or subject to obtaining proceeds when the current home closes. Those are an extra level of work that needs to be done versus someone that is paying cash, is waiving their right to do an inspection and has nothing else to sell, right? Addendum and amendments, and these terms get interchanged quite a bit. But it's basically like adding an additional page to the contract that has other information on it. An addendum adds information. Like we had agreed to close on June 30th and pay $200,000 for the property. And then we were going to do a 10-day home inspection. And during that home inspection, we realized this furnace needed to be repaired. So we asked the seller to repair that. We negotiated it. They said yes. So we're going to take that furnace repair and add it to the contract. It's an addendum. An amendment changes information. So let's say everyone agrees that the closing date of June 15th is absolutely not going to work. We've got to do it June 30th. We could do an amendment and just change that information. All the other elements of the contract would remain the same. A bill of sale I mentioned earlier as well. And a bill of sale is not part of the real estate contract. It's a separate contract. And this is where, if for some reason the buyer and seller agree to leave behind personal property, this is where it would go. We cannot have it on the real estate contract. Otherwise, the appraiser would be required to figure out the value of it. And they're not going to go and figure out the value of your baby grand piano and pool table, right? So standard appliances are usually allowed on the real estate contract, but any other personal property that might be exchanged goes on a bill of sale. And sometimes the buyer is purchasing this for a certain dollar amount, and sometimes it's free, but it does not go on the contract. It goes on a bill of sale. Then, as an example, I gave you a sample addendum for that property inspection result, where the buyer would either say they were satisfied with their findings, or they would ask the seller to make certain repairs. The seller would come back and say what they're agreeing to do. The buyer would acknowledge whether that response was acceptable. One tip I would give you, though, when you're writing these inspection addendums, if you're going to ask the seller to do any work, I would suggest that you ask for it to be done by licensed professionals and provide receipts. And I would write that here in the addendum. That wraps up contracts. Now you're on to your review.